All right, welcome to the show. I always love nerding out with experts in the world of money and finance, and Justin Krane is one of those guys, and he's helping with having a holistic look at people's financials. Justin, why don't you introduce yourself in 60 seconds or less to the audience, and we'll get into our conversation.
Sure. What's up, everybody? It's good to be here. Thanks for having me, Mark. My name is Justin. I'm a CFP, Certified Financial Planner, and primarily work with business owners, helping them create purpose-driven financial life plans. Working with business owners, I got involved in business money as well. I taught myself how to understand and read financial statements, so I do some limited fractional CFO work as well. I'm all about growth, building, growing, kicking ass, and all that good stuff.
All right, let's talk about this. You said purpose-driven financial
plans.
Tell me,
yes.
Let's talk about this.
All right, you ready? All right, Mark. All right, so if you had like $25 billion, what would you be doing?
I would be right now. I think a lot of us would be doing some philanthropy, private family foundations, public charities would be kind of fun. I would probably also have. I probably wouldn't be reviewing as many tax returns.
Okay. So what charities would you donate to? What's a cause that resonates?
I think I would start my own and start an organization to encourage entrepreneurship for those people who go through the school system and are forced to think like a student but aren't really meant to be students and employees. But I also would probably – I have a friend who does and I've donated to an organization for foster children. In fact, whenever our clients are late to meetings or they no-show, really, whenever clients no-show, we charge a $100 fee that's donated to a charity of our choice, which usually goes to him.
Yeah. So expand a little bit on wanting to help entrepreneurs and business owners. What's driving that?
I think it would be fun. I think it would be fulfilling and rewarding. And it's with the right people, it's work I would do for free anyways.
Yeah. Did you struggle getting into business for yourself? Was it challenging?
Well, I think I spent the majority of my early career. I spent, the first maybe 10 years of my career trying to fit into the corporate framework and being a good employee. And I was never very good at any job I had. And it took me so long to pick up on the pattern that I just sucked as an employee and never would be good at anything. I don't think like an employee. So I had to learn the hard way through pain and trial and error that I could start a business. And I was raised to believe 9 out of 10 businesses fail. So why even try? The odds are so stacked against you. So it was never a possibility in my mind because of how I was improperly deceived to think that you had to get a good job to be valuable in this world.
Sure. So how old were you when you were working for these first 10 years?
So I would say it took me from age, 23 or, 22, 23 to maybe 32, 33 to realize this is not for me. Like no matter what career I choose, I'm just not meant to be in a hierarchical organization. Having mentors who are appointed to mentor me, who I'm not even choosing as mentors, and it just wasn't ever going to work for me.
That must have been pretty hard for you to be working a 9-to-5 job, feeling not good about yourself for 10 years. It's like half your life.
Yes, it really sucked. And basically, at the end of my last, tour, when I realized I wasn't going to be happy at my most recent W-2 job, I had to come to terms with the fact that, and I knew entrepreneurship can be a harder road, but I just said, hey, if we continue going down this path, I don't think we're going to ever go anywhere. So, that's when I just had to realize, like, hey, now's the chance, to try something new that's a little more exciting and a little riskier. But, the data.
Yeah. I mean, I can relate. I can relate to that. Like I worked at UBS as a financial advisor and I wasn't happy and I stayed for 13 years because I didn't think I had the skill set to leave. I thought I was supposed to just do the normal stuff and just kind of trot on. Did your parents give you a hard time and say like you need to stay working in a job? Did they encourage you to try and leave on your own? Did they have a role in keeping you to
Well, I
stay?
would say my mom and I are very different, and my mom is very risk adverse. And so when I
Yeah.
first told her I was going to be helping people out with reducing their taxes, she said it sounds like a scam. And when I quit, she's like, "No, hold on to your resume just in case." So she always she's a much more risk adverse, likes to take the safer route. My dad was
Mm-hmm.
my I don't think my dad tried to steer me in any direction, but neither one of them ever encouraged me to consider being a business owner. That's something I had to figure out on my own. And I think also our schools and institutions and society growing up would have discouraged me from even considering down that road. I mean, when you're in college, everybody
Mm-hmm.
tells you go on Monster or Indeed, or they're trying
Yeah.
to groom you into being an employee and taking an entry level job.
Yeah. So you must have this really inner drive to help business
Oh,
owners
absolutely.
get the help that they need to start one and
I
to
mean,
do
think
it.
about the kids, they're trying to groom into future W-2 folks and trying to turn them into academic
Yeah.
people. And some kids are just not meant to be it, and they don't realize there's a whole other world out there of entrepreneurship that may be perfect for them. And maybe that's where they're meant to thrive and
Yeah.
really realize who they were meant to be as an entrepreneur.
Yeah. Have you done any of the charitable work for entrepreneurs now, or is it something you want to do a little bit later on?
Well, we have some legacy clients and we haven't raised their fees, so I would consider that to be charitable work for
Hmm.
entrepreneurs. But no, I haven't done
Yeah.
it. Um, there's not a lot of room in the work week to do new things, but with the right processes and systems, and as we, become more, a more mature organization, I'm hoping that there will be time for that stuff.
Yeah. Can I
Yes,
challenge you? So we're by the way, we're creating a purpose driven
I can
plan
tell
right
this
now.
feels like a therapy session, and I'm cool with
This is
that.
what yeah, yeah. So I'm sure you know what a donor
Yeah.
advised fund is, and probably everyone listening. Yeah. You could literally put $100 in that or 1,000 or whatever, get your deduction. I mean, this
Hmm.
is your world. And then write a check whenever you want to help kids start businesses or whatever.
Very cool.
So that whole exercise, that we went through, in other words, like the thing is that if you were to get hit by I asked this other question to clients, if you go into the doctor and he says you have 3 days to live, like what did you not get to do? Who did you not get to be? What did you not become?
Hmm.
All of that. So if something were to happen to you, you want to leave some sort of legacy. Do you have
No,
kids, by the way?
I've
No. Okay. Cats. Okay. Yeah. Yeah. So how cool would it be if you could start something where you really could leave a
yeah.
legacy in something that really means something to you? Because I guarantee you, there are people out there right now that don't know what to do about starting businesses and all that. So that whole exercise that I took you through, that's a purpose-driven financial life plan. It really, really means something to you because you're really, really good as a business
Mhm.
owner, especially with tax. You can help. There's some kid out there who's 18 who doesn't want to
Mhm.
go to school, doesn't want to work at a job, has an idea, doesn't know how to make it happen, and needs your help.
Mm. Yeah, and I think back when I was 18, I didn't want to go to college. My parents just kind of forced me into it,
Yeah,
because that's
yeah,
what
yeah,
you
yeah.
do. And I mean, at least I went to a college that was fun,
Sure,
but certainly the academic element of it was not of interest.
totally. Yeah.
Yeah.
It sucks. It's a bad feeling when you're forced into doing something that doesn't speak to you and your gut's like this sucks, but you're young and you don't have the skill set to really figure out what you want to do and you know,
Oh,
it's hard.
absolutely. Um,
It's
so
hard.
so and then there's ways to structure this. You have your donor advised funds, private family foundations, or and then you can have your, in addition to that, you can have, set up public charities, and then there are some tax strategies also, or tax opportunities with those, or ways to
Sure.
get grants to help finance it, and to
Sure.
put maybe capital gains
Yeah.
assets into your public charities, and
Yeah.
a whole world of strategies
Sure.
around public charities and foundations as
Yeah.
well. Some
Yeah.
are a little more
Awesome.
aggressive than others on what they're doing with their charities.
Mm-hmm.
Yeah.
Mm-hmm.
So in
Yeah.
addition to, so you're working with clients and you're talking about these purpose-driven ideas. What are some other things that you're bringing to the table that you think? Now, most of our clients hear us talk about real estate investing and tax strategy and maybe some basic financial planning. What are some unique things that you're bringing to the table you think our audience normally aren't considering?
I don't. So the short answer is I don't have anything unique. However, because we're looking at our business and some other clients' businesses, and sometimes doing the same thing, if it's working, is the best thing to do. Like if you're growing at whatever rate that you want to, and you're like, oh, should I do something different or whatever? It's not working. Who knows what? Sometimes it's just doing the same thing if the results are good. That like the definition of insanity is doing the same thing over and over and expecting a different result, right? But if the result is good, why not just keep doing that? So for us, we're growing. It's a slow and steady growth. For a lot of my clients, it's the same way. As far as unique for tax, the only like two that like they're totally out there, but like not everyone is doing are and again, this is general, like everyone listening, you have to work with your own tax person and your own financial advisor. But I believe in lots of Roth conversions, lots of backdoor Roth, all of that. I just think that I just see it when my clients take money out of their pre-tax IRAs and we have to do withholding on them. You got to take more money out to satisfy the need of whatever it is that you have to spend the money on. And also when my clients pass away and then their kids get the money and they have to take out RMDs and there's tax withholding on that and, tax rates and all that. So we're doing a lot of Roth conversions, working with the CPAs to do the tax planning around that. And then the other thing that we're doing, which like it's in California, is just the PTE tax. We're encouraging our clients to pay their state taxes through their corporate books, and we're getting the CPAs to calculate that. And then the last thing around taxes is, I don't know when you're going to publish this, but everyone listening, at some point you will have filed your taxes. At some point you will have already filed your taxes, and then the work for the prior tax year that you filed is done. Now all of a sudden you're in your current year, and a lot of people don't think, okay, well, what do I need to be doing this year? And some CPAs that file the taxes, depending on the calendar time month of when they do it, they go on a vacation or they're like off the grid because they need a break. So I like to get in front of that and start working on the current tax year and getting the CPA and the client back involved to see what it is that they want to do. So is any of that unique? No. It's
but it's rare
stuff
that most people get to consider these things. I think that most people have, most firms are what I call a 1040 factory, where they're super busy from January to April or maybe October, but they're designed and they price their services in a way so they can only afford the staff to only do compliance work. And when you reach a certain income threshold, especially if you're making 7 figures of profit or W-2, you're going to need a little more proactive guidance than that. Roth conversions are I think this is another area where people try to do their own tax planning. So maybe they'll do a cost segregation study and eliminate their taxes, and they think the job is done. But with a Roth conversion or other strategies, or even if let's say you're operating at a loss, your business has depreciation in it, or let's just say your business isn't profitable. Some people forget that even when there's no profit, there's so many opportunities for tax planning here. And that 401k and IRA is going to grow and compound and accumulate. And eventually it's not taxed at your long-term cap gains rate. It's taxed at your marginal rate. It's taxed higher than those stocks
Yeah.
would have been outside of the retirement account when you take it out. So by
Totally.
converting it at the right time, instead of having a ticking tax time bomb, now you have something growing completely tax free. And there's just so much.
Absolutely.
Yeah.
When I show the clients, like, okay, all right, so you got $1 million in an IRA, and then it grows, and let's just pretend it's at 2 million or
Yeah.
2.5 million. Then we do a required minimum distribution calculation, a ballpark, whatever, call it $75,000 you're going to have to take out, or 100, whatever the number is. Then we model out Social Security at age 70. This is so funny. So let's say the husband and the wife each have $50,000 a year of Social Security at age 70. They have a required minimum distribution. By the way, for those of you listening, an RMD basically is a required minimum distribution. It's when you have to take money out of your 401k, IRA, whatever you want to call it, at age between 72 and 75. It'll depend on the year and all that. But at some point, you have to take the money out. The government wants it. You have to pay some tax on it. So you have these RMDs, let's say they're 100 grand, and you've got Social Security at 100 grand. And the next thing you know, you're making $250,000 of taxable income, and you're not even doing anything. You're not even working. So people think, oh, I'll be in a low bracket. Like, the wealthier people, it generally doesn't happen.
Yeah. So if you're strategic about it, there are ways you can time this thing when you take it out. And I mean, now some of our clients are even looking into investment vehicles where the investment inside of these tax deferred accounts, when there's a conversion to the Roth, will create losses, or because of the reduced value of the asset at the time of the conversion, will offset it anywhere from 20 to 40% of the taxes on that transaction.
Mm-hmm.
Yeah.
Yeah. I think the big thing with tax, Mark, is that most people, they don't know what to do with taxes. It's just not their wheelhouse. It's up to people like us to give them ideas and to just communicate with them. I mean, people really are just looking for, like, what should I do? What are my options? I have no idea what to do. What do you think I should be doing? They're looking for proactive advice, and they're not looking for reactive, like, oh, you should have done this, or you owe that. Actually, another thing is this is a really important thing for business owners, is if your business is growing and killing it, what most of the CPAs will do is they'll give you the penalty-free estimated tax payment plan on the prior year's tax return. When you file your return, you get the letter, right? And you say, these are your estimated tax payments. But then if your business is killing it and you make an extra $500,000, $5 million, whatever, you're going to owe more money in tax. But if you don't tell the CPA that you're making more money and he or she doesn't give you the estimated tax payment, increase, you're going to have a big ass surprise in April. And then it's like, thanks for nothing.
Yeah. Another thing you mentioned here was the pass-through entity tax election, which if you're working with an older CPA or, someone who's towards retirement, basically this thing is often missed because it's relatively new, this opportunity. And basically what happened is around the time of the Tax Cut and Jobs, with the Tax Cut and Jobs Act, you were capped at $10,000 state and local tax to offset your federal. So a lot of folks were infuriated in California and New York and other states because they're paying all the state and local taxes, and now they can't even write it off against their federal. They're paying taxes on it again. So the workaround is if you have a partnership or S Corp, usually we do it with S Corps, you're going to be able to pay the taxes through your entity, and now it's tax deductible against your federal in excess of that $10,000. And with a high income earner, we've seen this create savings anywhere from $20,000 to $85,000 for our typical high income earner under certain circumstances.
Yeah, I had a client that didn't do it, and he thought his controller did it. It's like taking 50 grand and literally throwing it in the trash.
Oh yeah,
insane.
Yeah.
And
that's state by state specific. So it takes research. And that's one of the reasons why it's worth investing into a more premium concierge service if you're at a certain income level, because someone who's charging you, $2,000 for your partnership and like $1,000 for for your, like maybe 2-3 grand a year, they're just not going to have the staff and availability to look into these things that could save you tens and hundreds of thousands of dollars in taxes. So what are some, so I'm just curious, what are some other interesting things that you, or exciting things you got going on that you're doing with your clients right now? How are things going?
I'm telling you, there is nothing exciting. It's just like, it's so boring, meaning not that I'm bored, but it's just boring. Like, it's not, there's nothing like, oh, I believe in on the investment side, like I believe in the efficient market theory. Like, I believe that the markets are efficient. I'm a big believer in index funds. I'm not into stock picking. It's not something that I do with most of my clients. And so, the way to build wealth is really slowly. And I've listened to a lot of, thought leaders in this space. They all pretty much agree. I mean, you always hear of the overnight successes, but really the way that people build wealth is slowly. Like, they kill it in their business, they invest money, they compound the money, they do their thing. Maybe you have this great big idea and you sell it for a lot of money or something like that. But like, most people build wealth slowly. So I just, like, there's nothing,
well,
there's nothing really exciting. And like, there's no like, oh, you need to do this, or like, just not.
We've been having similar conversations with our clients, and I noticed this in business owners, where for some of the less seasoned business owners and investors, there's this idea that newer is better, right? Neophilia, I heard someone call it. So, they hear about these crypto investing schemes, or they hear about, not like I'm against crypto, but they hear about Amazon drop shipping multimillionaires, and you can make $1 million a week and only work 20 hours if you take my course. And then they're investing in real estate, and now they have a drop shipping company, and both are failing because they don't have the time. Instead of the slow and steady and just being consistent and just getting really good at a thing that you do and relying on foundational strategies. So it's something that I've noticed in a lot of our clients. In fact, I think 100% of our clients that have ever done Amazon drop shipping have all lost all of their money.
Yeah. I mean, if you think of like, how do you lose 50 pounds? How do you train for a marathon? How is the world set up? Like, how do you grow as a person? How do you get good at something? The whole world is, I'll get a little spiritual here. God created the world to be this way, where not everyone gets rich quick overnight. Not everyone loses 30 pounds in 2 days. You don't just wake up and run a marathon in 4 days. The world doesn't work like that. You got to work at it. You got to build at it. So, that's my own 2 cents.
Here's where I disagree, because I think that converting funds into Roths and being strategic and having those year-end conversations is interesting and exciting. I think that the stuff you do is really cool.
Yes.
Starting foundations and charities, stuff. I mean, to really have an impact in considering the tax strategies. I think what you do is pretty exciting, and there's just so much opportunity with these things that we can do.
Thank you.
Yeah.
Thank you.
Well, so Justin, I really enjoy our conversation. This is a bit of a shorter podcast, but and I really appreciate your time. Is there a call to action or anything you want the audience to listen to know a little more about you and your background?
No. You can connect with me on LinkedIn, and we have a website and all that stuff. But let's just end with this. Like, for those of you listening, I believe in you, that you can create the financial life that you want. I believe that you have the skills and the tools and the mindset to do it, as long as you marry it with action and belief. So if you're looking for a kick in the pants, oh, I don't know what to do, you've always been thinking about doing something, you have the freedom to choose what you want to do and how you want to think. So go
And don't
for it.
marry the wrong woman, because that'll also hurt your
Well,
um,
thanks for
Justin,
having
thank you
me.
so much. And if you want to find him, it's Justin Krane with a K. And I'm friends with him on LinkedIn, so you can find my connections as well. And I'll put his website and that information in the show notes if you want to learn more, especially about some of these amazing opportunities with purpose-driven uh, financial planning. Lots of cool stuff going on here. Awesome. Thank
Thanks,
you very
Mark.
much.